Dr. Lambu, have you found an EA that can save all your work so that you can make a profit in a breeze?
You were just daydreaming. You can't totally rely on that thing. Today I will teach you about technical indicators. Stay focused. Technical indicator. Technical analysis is one of the major ways to analyze the Forex market. Basically, it involves using technical indicators to analyze the market and predict how the price trend is going to perform in the future. MA indicator, moving average. Moving average, also simplified as MA, is an indicator that is derived from calculating the average for a certain period. In a chart, it is represented by a line that connects all the averages. MA helps in identifying trends by reducing the noise from the fluctuating live prices of an asset.
I got it, but Dr. Lambu, how would you use this MA indicator?
If you set the period to longer terms like 100 days, 200 days, 250 days, and 300 days, that will make the trend more obvious. These MAs are considered as effective support and resistance levels. RSI, Relative Strength Index. Relative Strength Index, or simply RSI, is a momentum indicator calculated by applying the stochastic oscillator formula. It is calculated by dividing the average gain by the average loss of a certain period. Subsequently, traders use it to identify if the market is in a bearish or bullish trend. The MT4 software is provided about 30 indicators in default, and the most popular ones are MA, RSI, MACD, and Bollinger Bands. All right, we've looked at two technical indicators, the MA and the RSI. I have a quiz ready for you to take. Are you ready, my boy? We have gone over all the basics about Forex, but you still have a long way to go. Never give up. I believe one day you will become an outstanding Forex trader.
Thank you for the encouragement. I will keep working my butt off.